For today's training, I want to go over calculating rental income. Not gonna be long because rental income is pretty simple compared to other income calculation. Let me share my entire screen. Before I start showing you how to calculate the rental income, a few things to remind. Um, the requirements for rental income documents is different from the programs. So for example, for FULDA conventional, we usually require the most recent 1040, most recent personal tax returns. But for SHA, VAs, or other jumbo loans, we usually require 2 years. So it depends on the programs. So if you are reviewing any files that has large amount of the loan amount, or if LO wants to apply any government loan, and if there are any finance property that borrower reported rental income, make sure you have 2 years of tax returns. But for conventional FOLDA, you can just collect most recent one. And for non-QMs, you don't collect personal tax return. I saw some of you still request like income documents, W-2 or personal tax return, although LO mentioned that it's non-QM, like P&L or bank statement. In that case, you don't collect the personal tax returns, but you have to collect the lease agreement plus 2 months of rental income deposit proof. Okay, so depends on the different programs. And I think I already listed out the income documents we need from the LO, depending on each program. So please refer to those checklists. If you don't have it, feel free to ask me, then I can share with you. That's the thing that I want to remind you. And then let's look at the practice file. This file has multiple rental properties, so I think this is the good example to show you how to calculate the income. Do you see this personal tax return? Okay. So whenever you are reviewing the rental income, make sure you list them out in our Calix. Page 2 and 3 on the very bottom, where it's shows financial information, real estate. So if you have any borrowers who currently own other properties for rental, you have to disclose all the properties in this section. Also, since those are owned by the borrower, you'll have to run property profile. And currently, we're still waiting for Peter to reset the password, so you can't access it right now, but I'll give you guys password once I hear it from Peter. So if you have any own property, make sure you run property profiles and then disclose them here. Also, when you check the property profile, if the property was purchased more than a year, it means the borrower has to report the rental income on the Schedule E on the personal tax return. So if that's the case, you'll have to collect the personal tax return from the LO. If the borrower recently purchased the property, let's say borrower purchased the property back in January 2025, and 2025 tax will be prepared next year. So you don't need to collect the personal tax return. Instead, you'll have to collect the lease agreement plus 2 months rental income deposit proof. Okay? And if borrower has not filed 2024 tax returns yet, then you can collect the most recent tax return. Instead, you will collect the lease agreement plus 2 months rental income deposit proof. Okay. So let's look at this borrower. This borrower has multiple rental properties. So if you go to Schedule E, that's the section where borrower reports the rental income. So this borrower has 1, 2, 3, and their second page, 4, 5. So total 5 rental properties. So let's start calculating these 5 properties. Whenever you're calculating, start from the net rental. So if you look at the line 21, this is the net rental. So if you look at the description for line 21, It says subtract line 20 from line 3. So line 20 is the total expense, and line 3 is the gross income. So gross income minus all the expenses will be the net rental income. That's why you start from number 21, the net rental. So let's start from the very first one. Net rental is 28,529. And number 3 is gross rental income. So you're going to just leave it as is. And this expense section from number 5 to number 19, there are 4 fees that we can add back. Insurance, number 9. Mortgage interest, number 12. Taxes, number 16. And depreciation, number 18. And there are 2 other expenses we may add back, which is repairs, number 14. But in order for us to add back this repair cost, it has to be one-time occurrence. So maybe the Bauer remodeled this property and they spend like 10,000 of repair cost for as a one-time expense. We may add back to the rental income, but we have to get the invoice supporting that it's a one-time cost. We can add back like a AC repair, like regular AC repair or regular HVAC, cleaning. Those are recurring expenses, so we really can add back those expenses only one time. And also the other thing is other expenses in line 19. Usually CPA attach statements for other expenses for rental property. So if you look at any other expenses reported on Schedule E, if there's any statements, scroll all the way down to the back of this personal tax return. The CPA will list out all the expenses he disclosed in other expense section. And in other expense section, amortization can be added back, but all other expenses you cannot add back. So maybe HOA expense you can add back. It's HOA and amortization. Other than that, you cannot add back to the rental income. Okay. So let's keep calculating this rental income. So from the net rental income, I'm gonna add back the insurance, 1,118, and then mortgage interest, 11,219. Then property taxes, 8,104, and depreciation, 9,184. And if you look at other expense section, there's a statement attached to this property. So let's scroll down to find the statement 2. If you look at the back of this personal tax return, here for property A, B, and C, and we are currently calculating property A. The expense was 308. This was for umbrella insurance, which we cannot add back. So even if it's disclosed under in other expense section, we cannot add back this 308. So let's go back to the Schedule E. So this is the yearly rental income we can get for this property. So take this, and then you're gonna divide it by 12 months. 4,846 and 60 cents will be your monthly net rental income. So you're gonna put this rental income, let's say property A, and then you're gonna put rental income here. And it will automatically calculate the rental income and then give you the net rental after deducting all the expenses. And then when you are using the rental income from the Schedule E, make sure you put 100% for occupancy rate. Any income that you are using from the lease agreement, you're gonna always use 75%. We always have to have the 25% equity. So if you're not using personal tax return to calculate the rental income, always put 75, but when you are using Schedule E, put 100%. Okay. Is there any other question? If there's none, let's keep calculating for other properties. Let's do this B. So like we did the previous one, we're gonna start from the net rental income, number 21, line 21. So 5,139 is the net rental income. Starting from here, you're gonna add back number 9, insurance, and then mortgage interest, 17,825. And then taxes, 8,459, and depreciation, 12,709. And there's also other expense, 308, but I think we saw this as insurance, which we cannot add back. Let's just double confirm. For property B, it's for umbrella insurance, so we cannot add that. Let's go back to Schedule E. So I think that's it. So you're going to take this yearly rental income divided by 12 months. Then you'll get 3,764. This will be the rental income that you'll be using in our calcs. Okay. Let's do the third one. You're going to start from line 21, which is negative 1,577. Start from here and then start adding back the expenses that we can, which is insurance, 667, and mortgage interest, 12,719, taxes, 6,754, depreciation, 9,944. And for this property as well, Bauer reported other expenses of 4,383. Let's check what these expenses are for. If you look at property C, there's an umbrella insurance that we cannot add back, but we have HOA dues. HOA can be added back to the rental income, so I'm gonna add back 4,075. And if you are adding back HOA dues, it means that this property is a condo or a PUD. So when you are adding back HOA dues, you have to get an HOA statement from the LO, so you can deduct monthly HOA fee when you are calculating the net rental income in our calcs. Okay. So let's go back to Schedule E. Yeah, there's no other fees we can add back. So you're going to take this yearly rental income and divide it by 12. And monthly rental income will be $2,715.60. Okay. Let's do 2 other properties. This one, on the page 2, this property A, if you look at the fair rental days, you see Bauer only reported for 15 days. It means whether Bauer bought this property very recently or Bauer converted this property into the rental property recently. So if the fair rental day is 15, Bauer only rented out this property for 15 days in this year. So in this case, I would rather get the lease agreement plus 2 months of rental income deposit, because we really can't get accurate number of rental income if Bauer only reported 15 days of rental income. So when you're calculating it, make sure to check the fair rental days. Usually the standard fair rental day is 365 because Bauer rents out the property for 1 year, which is 365 days. But if you find any fair rental days less than 2 months, I would say 60 days. If it's less than 60 days, I would get lease agreement plus 2 months rental income deposit instead. So I'm gonna skip this property for now, since we can get any accurate number from there. Let's do the Summit Circle under column B. So let's start from the net rental, which is negative 25,354. And then I'm gonna add back the insurance, 1,976. And then add back mortgage. There's no mortgage interest. So I'm gonna skip over to the taxes, which is 8,556. And then depreciation, which is 11,401. And I think that's it. So I'm gonna take this negative number divided by 12. Then I get negative 285.08. So although Bauer rented this property for a full year, the actual number we got from this property is negative. You still need to hit this number in our calcs so DTI can be calculated correctly. It will make DTI go up because negative means it's rather expenses, not the income, but we still need to use this to get the accurate number of DTI calculation, okay? Yep, I think that's it. Is there any other questions regarding calculating the rental income?
I just have one clarification.
Mhm.
What's the difference if we are going to use the rental income worksheet compared to just directly calculating based on the 1040?
I don't understand what your question is. Liz,
Like,
you want to know the difference between the personal tax return and?
um, what's the difference? Is there a difference with the result of the calculation if we're going to use the rental income worksheet? Because we were taught before to use it, and then today, it's just a manual directly from the Schedule E. How about if
The
we're
rental
going
income,
to use,
uh-huh.
yeah.
No, go ahead, go ahead.
Um, what if we're going to use the rental income worksheet because we have, bases, we have like what to look for. Is there a difference with the result?
Rental income worksheet, isn't that based on the Schedule E? Which rental income
Yeah.
worksheet are you referring to?
Yeah.
The
We're
rental
basing
income worksheet that you're referring to is the one that you are using for calculating rental
yeah.
income for Schedule E, right? Yeah, it's
Mm,
basically the same method. I'm just speaking out how to calculate it, but the rental income worksheet should have the same information that I just talked about.
mm,
Yeah,
okay.
it should be the same. Yeah. Do you have the rental income worksheet template on your end?
Yeah, we do have. We were
Mm-hmm.
thought. You discussed it before on how we're going to calculate a rental income based on the
Mm-hmm.
Schedule E.
Mm-hmm.
And so for
Yeah, I
me, I
think
think
it's
it's
basically
easier
the
for
same. Mm-hmm.
yeah. I think it's easier if we're going to use the rental income worksheet. I don't know if the other processors will
Yeah,
gonna agree with this. So
got
we
it.
have a
Because it
guide.
visualizes the
Yeah.
fees. Yeah, when I calculate the rental income, to be honest with you, I really don't use rental income worksheet because it's pretty simple process to calculate it.
Mhm.
All I have to do is take the net rental income and then add back what I can. So I really don't use rental income worksheet. That's why I didn't show you the rental income worksheet when I just calculate the rental income. But you can always use the rental income worksheet to be just safe and to be accurate. Yeah. But all the
Okay.
things on the Renaico worksheet should be the same that I just talked about for today.
Okay.
Yeah.
Gotcha.
Okay. Any other question? Nope.
Mm.
Okay. I'm trying to go over all the income type. And Romy told me that when I go over the income calculation during this training, it seems like it's very easy, but when it's the time when she calculates the income, it gets very tricky. So if you have any like income documents that, yeah, I know. Well, I don't know why, but well, so what I'm thinking is if you have any income documents when you're reviewing the files, if you think that the income calculating the income is tricky, try to share the copy of the income documents via email with me so I can go over the income calculation for that file specifically for the next week's meeting. So whenever you're having hard time calculating, just share the copy of the income calculation and income documents so I can share with everybody and then we can go over the tricky files. Okay. All right. If you don't have any question, let's call it a day and then I'll see you guys next Monday. Thank
Thank
you.
you.
Thank you.
Thank you very much. Bye-bye.